First of all, thank you everyone so much for coming in on a Thursday morning to House of Web3. Also, thank you to House of Web3 for letting us put on basically an event that I've always wanted to bring these two industries together. Many of you know, some of you are new faces and don't know, but I've worked in the crypto space since 2014 and recently joined the Lurie group about almost a year ago, not quite, but really excited to bring these industries together and hear from experts both in the real estate space as well as crypto. Before we begin though, I'm just curious with this crowd, raise your hand if you're coming from the real estate space. So I'm just curious, got some hands up, and then raise your hand if you're currently working in the crypto side of things. Right, a little bit more than real estate. And then last question is raise your hand if you just came for the free burritos. Maybe, yeah? I'm gonna get my burrito afterwards.
Thank you for being honest.
Make sure to please, on your way out, make sure you're well fed. There's great burritos. And the last thing I'll mention before introducing our panelists is just a mini disclaimer that nothing that we're speaking about today is financial advice. This is purely educational. It's meant to be fun. We have a good-sized crowd here, so also we do have time for questions at the end, but while we're speaking, if you have a question, I think we're a good size where you can raise your hand, ask your question, and I hope this can be interactive as well. So with that, I will have the panelists introduce themselves. I'm going to have Ori go on first to introduce, just because he won't see us when I'm pointing to him. So, or if you want to do a quick introduction, and then we'll do Val, and then we'll do the others.
Sure. So nice to meet you guys. My name is Ohayon. I am the co-founder of a company called OCL, On-Chain Listings. I've been in the startup space for about 5 years, and with the primary goal of trying to figure out how to use blockchain to conduct transfer of title for real-world assets. This is my second startup in the tech space. And now our mission with OCL is really leveraging AI to amalgamate real estate data and then using blockchain protocols to conduct title transfer, with the final mission of being able to digitize land registries.
Awesome. Thank you.
Hey, so I'm Val Lee. I'm the COO of Villcaso, where we're making the easiest way for investors around the world to get the financial exposure of owning U.S. real estate. In essence, we're creating a global real estate fund where we're going to be owning U.S. housing. So investors around the world will be able to purchase a token and have ownership over U.S. real estate. Before this, I've been in the management consulting world. My co-founder had been in the mortgage space, and so we put our heads together in the past couple of years and decided this was where we wanted to focus, and excited to be here. Thank you.
Awesome. Right, the realtors.
Hi. Yeah, I'm one of the two realtors here. My name is Alexander Lurie, born in San Francisco, grew up in Marin, live here with my wife now in the city. I started the Lurie Group, been in the business for about, I guess I'm in my 11th year now. We focus on San Francisco real estate, so buyers and sellers, but outside of San Francisco, we run a real estate matchmaking program where we connect buyers and sellers to the right fit real estate agents all over the country, and actually internationally now. So we've connected over 500 buyers and sellers around the globe at this point. Prior to real estate, I'll go there, I was also in management consulting, but I also started an e-commerce company that I sold, and then I moved back out here, and wanting to start another company, somehow I found my way into real estate. It was not in the life plan. But fast forward 11 years later, this is what I've been doing, and it's been really fun and interesting.
My name is Baxter. I'm a realtor as well. I work with Alexander on the Lurie Group. I'm originally from Boston and made my way out here from Boston, New York, LA, San Francisco. So I started real estate in New York, and then I had a foray in the entertainment business in LA. And then have been in real estate for over a decade in San Francisco. My wife is a 4th generation San Franciscan, and my kids are 5th generation San Franciscan. So I say I'm a native by association. But Alexander and I, we pride ourselves on, we focus on San Francisco. We love San Francisco. You know, we've seen it through some highs and lows, but we, you know, sell real estate here. We love that people are planting roots here and purchasing property here. And so we also are interested in the crypto space, and we were very happy for Sarah to come on the team, and you know, is an expert and has taught us a lot, and obviously organized this. And we're excited because we see the possibility of the intersection of the two industries and what can happen. We are at Compass, which is a, you know, tech forward brokerage. So we're very excited to be here and you know, explore the possibilities.
Yeah, thank you. No, I think that's something that I always love to tell the story. I interviewed for a few months with different brokerages, and every brokerage I would speak with, I would tell them about my background in crypto, and they all thought I was super shady. They weren't interested in working with me. They thought that industry is silly. And one of the biggest pain points of crypto companies, not just trying to speak with real estate companies or realtors, is education and helping educate and bring a broader perspective. So I'm very grateful to join a team that was open and excited to learn about crypto and to host these type of events where we can learn more, but also hear from those directly working in the space. So with that, I'm going to start with Val, and then I'll move to you, Ori. But if you want to share with us, you know, how should we be thinking about real estate and blockchain? How can blockchain be applied in the life cycle of a property? What part are you working on specifically?
Sure. So I like to think about, as Sarah mentioned, the life cycle of a property. So, you know, from development, occupation, you know, or being occupied, and then all the way through to sale, and of course, you know, new buyers. And along that journey, as we know, there are just a million different touch points for that property with technology of really any sort, and then, you know, different service providers, agents, you know, management. So all along this journey, I think there are moments basically where we have a choice. Is this a good spot to apply blockchain? And I was recently thinking a lot about some of the Robert Leshner, the founder of Compound, was saying, you know, the way we got to think about this is better on blockchain. And so at each of these moments, first off, could blockchain be applied? But second off, is the activity better on blockchain? And, you know, for what I'm working on, which is in one of the, you know, small corners of these moments, I'm working on bringing better ways of financing properties and helping homeowners basically better access their wealth. Today, we're starting with a particular corner of this called home equity investments. As we get deeper into helping homeowners better finance their properties, we'll probably start expanding up the chain. Today, we're starting with bringing home equity investments on chain and making them more easily tradable. You know, tomorrow we might be able to actually make those investments on chain, so actually interact with the homeowner on chain. So it's just for me, it's a question of what are these moments? Can it be done with blockchain, and is it better on blockchain?
Awesome. That's really exciting. And I think it's something that right now, as many here know, real estate is not, we're not quite there yet, but we're moving in that direction. So it's exciting to see these use cases. For Uri, if you'd like to explain a bit more on on-chain listing, I think also this is something that touches realtors and homeowners daily with what you're doing.
Totally. My mission statement with leveraging blockchain in any form of tech in any traditional space is finding a way to integrate it seamlessly. So end users shouldn't really know, in my opinion, that they're using blockchain, that they're using AI or any other form of tech. Our job as innovators is really to utilize that tech to fix the back end and make the front end as seamless and fun and enjoyable and cheap as possible. So what we're doing at OCL is we're really trying to figure out faster ways of creating, for example, a title report or the deed of ownership to a house. Finding a way that you don't necessarily need to deal with a title company or a lawyer to pull that information on your house, because technically that information should belong to you. Finding a way to pull that all together and just giving the end user a very simple PDF. Once that PDF is in your hands, then you can do the title transfer. And our goal is really to create an online portal where users can interact with a software that allows them to transact their property, and have intermediaries like lawyers, title agents, brokers interact with them through that, rather than having to go to a lawyer's office or having a notary come in and sign paper documents. I think those are all hurdles and barriers of entry into the real estate world. If we can use AI and Web3 to reduce the cost and also reduce the amount of time that is spent doing these transactions, I think then we've proven the long-term case for this tech. So my mission statement is really to integrate it without anyone actually seeing it.
Awesome. I think, do we have a question in the crowd? We have a question. Hopefully, I need to bring the microphone over to you for him. He cannot hear without the microphone. Sorry. one little thing with the tech.
Hi, yeah, I'm just looking at your website, and I'm curious why you think now is the right time to do this, because this technology has surely existed for 5+ years. Why hasn't anybody done this already?
So I've been working on this personally for well over 2 years with a couple of the co-founders, and the biggest hurdle in this is understanding of the technology and also understanding of the sector we're trying to innovate. So real estate titles and title transfer are extremely complicated, and there's a ton of intricacies. So it's taken us well over 2 years to just amalgamate all this information and this data and create a product that can actually handle it. Blockchain is simple enough on its own. We understand how to use blockchain. We're just figuring out how to apply it. So for OCL, our biggest hurdle has really been taking all the intricacies of title transfer and translating that into something the blockchain can process.
All right, we got the thumbs up. I don't know. Are you able to see the crowd or?
No, I just see the speakers.
So
if I could just pepper something in, I think what's really interesting
perfect.
that OCL is doing and what Ori's doing as team is that you all know credit monitoring, right? When you're watching your credit report and understanding if somebody has taken a credit card line out or something that's impinged on your ability potentially to get financing down the road. When you buy a home, you necessarily have to go get a credit check, and you want to make sure nobody has done something that could hurt your credit, or that you've done something that inadvertently hurts your credit. I think there's an implication, and Ori can speak to this, but what he's doing is that you can have real-time monitoring of your title report, such that when you go to sell, this is less relevant in San Francisco, California, more in Florida and other states. But when you go to sell, you're not going to have a surprise seeing that somebody has put a lien or some sort of blocker on there, so that would inhibit your ability to sell. And so it's such an obvious need in such an obvious market. And I think it's actually brilliant, so that homeowners and sellers aren't surprised at the last minute, because often these offers from a buyer are contingent on having clear title. And so if there's an issue at the last minute, that buyer could potentially back out, and that could jeopardize your transaction.
Awesome. No, it makes a lot of sense. And I think with anything, when there's a change, especially in an industry as real estate, it takes a lot of time. A question for Baxter would be, what do you think are the current pain points in the real estate industry, even if they're not right now being solved through new technologies? What would you say are like the top couple of pain points people have?
Yeah, well, I was actually going to say, and I think it's pertinent to the question, why the technology's out there, why hasn't it been adopted, in 5 years? And I think high level, it's regulatory. And I think because we are such an old industry and there's so many regulations and, deep entrenched processes in place, that it's really hard to change those. And so I think, to me, and conversations we've had and relevant to what Ori's doing, smart contracts and blockchain, it just makes so much sense for our industry. It would make it so much easier, would save so much time and money if we could have everything on the blockchain. People could see it all. You see the history, you see the title history. You can do the contracts and the transactions on the blockchain. It makes a lot of sense. But I think there is a lot of pushback because I think, one, just frankly, there's a lot of money being made in title companies, lenders, all of these different ancillary services. And I think that is the biggest hurdle right now, is regulatory and entrenched kind of organizations and processes.
We have another question.
Yeah. So has blockchain been adopted in any other countries that do not have this regulatory problem because the technology has been here, 5+ years?
So I'm actually curious to hear from Val on this. And I don't know if you are prepared to answer or not, but I know you are focused outside the US specifically.
So I'm not sure I can speak directly to that question, but I think one of the advantages we have as the United States is some of the best technology and record keeping in the world. So as you get away from US, Western Europe, you start to find land registries which are kept in less secure formats than even we do in the United States, where you think, what a pain, I have to go down to City Hall to file or check in on a property record. So with that as the brief perspective, I think I would really echo Baxter. There's a lot of entrenched business processes. There's an old way of doing things. It's not broken. It becomes really hard to get everyone to fix it. And unless you have access to drive change at the top in some potentially smaller economy, it's really hard to push these changes through.
Yeah, and I think, as I mentioned in the beginning of this conversation, education is probably the biggest pain point that I found when interviewing different panelists for today's panel. My top question was, what is your biggest hurdle besides obviously regulation is something that comes up in every industry, but the education piece of why is this important? What does this mean? What's the difference between a digital asset versus blockchain technology? What's the difference between how things are being done today versus how they can be done? I want to move to another question I actually have. I'm skipping around a bit, but I think, Ori, if you would like to share with us a little bit more on how do you think Web3 will play into the digitization of real estate and how the infrastructure behind it?
Yeah, so I actually think the biggest hurdle isn't necessarily regulation, particularly with digitization of all this data. I actually think it's decentralization of all this data. So the way, for example, for Florida, all the data pertaining to your property is stored in probably 10 different databases across the internet and for pretty much every municipality in Florida. So no one really knows how to access this, but the data belongs to you. So I think one of the big hurdles is really figuring out how to amalgamate all of this. And that's kind of why we fell into AI and using artificial intelligence to really scrape this data off, because otherwise no one else is able to do it, and it takes days to get these reports. So yeah, the big hurdle and the big push for us over the last year has really been find all this information in an elegant way and find a way to store it in a secure manner. So, and the way I'm working on it is AI to source it and then blockchain to store it. And then on the front end, there's no need for education because the information is so transparent and it's already there. This is stuff you're dealing with on a daily basis. Your home is your biggest investment. So this information should be simple for you to understand and should be there without any hurdles. And if I can hide the blockchain behind it elegantly, then you don't even need to know you're dealing with blockchain. You just know you're getting data faster.
That's awesome. No, it's like I said, I think it's only a matter of time. I don't know if I saw a question or hand that was raised. All right. If not, I want to move on a bit more on sort of where we see things going. So Val, this one's for you on just addressing, going to market. You're focused obviously on launch, what that roadmap looks like, and where you see things going.
Sure. Thank you.
Third time's
Sure. So, speaking specifically about our project, or rather, stepping back, if anyone saw the big news in the past day or so, BlackRock has just announced a $100 million fund that they're running on the Ethereum blockchain. This is huge from a tokenization perspective. People talk about RWAs. This is the talk of all the RWA group chats I'm in the last 24 hours. I don't think this stops. And I think BlackRock is just the first of many groups in traditional finance bringing more assets on chain. However, I do think that the market might be divided into two segments. There's traditional finance done on chain, so pretty much the exact same steps and the exact same procedures, just done on chain, and decentralized finance, where you're actually doing some of the same activities, but in a new way. Maybe this is most easily characterized by the notion of permissionlessness. Can a particular token be sold peer-to-peer, or does it require central authority? BlackRock, the way they're approaching it, comes with that central authority, which is the same as everything that's been done on Wall Street for the last 100 years. Decentralized finance, you don't have that central authority, and it's a new way of doing things, and this is where we're investing, because we think this is where the ecosystem has been and will continue to grow, because outside of the United States, the rules are a lot different. Now, just putting this into the broader context of where the industry goes, I see in the financial space this growing growth in both spaces, and I eventually see things moving over to the decentralized space, because as more parties realize that they can protect themselves in the decentralized space, you'll see more investment flowing there. As we step back and look at the broader industry of real estate, as I was mentioning earlier, there's so many places where blockchain could potentially be inserted into the processes that exist today. Title, I think there's probably listings. I know there was that NAR recent news. I don't know much about it, and I'm probably less informed than other people on the stage, but the idea of an MLS that's on blockchain that gives everybody access, or at least polices who's accessing it. So I think there are a lot of clever use cases for a distributed database that'll come out in the coming years. And actually, to build off of what Ori has been saying, it's not about blockchain. It's about the use case and about seamlessness for the user. Blockchain just might be the enabler of new ways of connecting.
Yeah.
Do you mind if I
Yeah,
add
of
something?
course. Yeah.
So maybe the flip side of the coin, or maybe the same side of the coin, I think one of the biggest challenges and opportunities right now, opportunities when it comes to blockchain, Web3, decentralized finance, is DeFi. Right now, any buyer is hostage to, if I want to say it crassly, to conventional financing, right? You need to go through a bank, maybe you collateralize one of your assets, but in a conventional manner. And one of the biggest opportunities that I've taken advantage of in my own ownership of tokens is when I bought an investment asset in 2017, I collateralized some of my tokens, and I took money out, and I didn't have a tax event, and I didn't have to go through a bank, and I was able to go buy some investment property because I was able to do that. Well, buyers are going to be able to do that in the future when we can not just leverage against or collateralize our own tokens, but when they can collateralize, or rather tokenize, real world assets. And so if they have an asset such as real property, right, like a home, instead of getting a bridge loan or taking a HELOC, a home equity line of credit, where you borrow against your home from a traditional bank, if you can tokenize that property, and then you can actually use DeFi or have access to global markets to actually take an immediate loan against that asset, you can do so immediately, probably at less expense, and all of a sudden, you can transact a lot faster. And right now, a lot of our clients are maybe like many of you. Maybe they're starting up a company. Maybe they don't have W-2s. They don't have steady flow of income. And so they don't necessarily qualify. They're not the vanilla employee. They're not working they don't have multiple years of track record as an employee. And so getting a loan can be really challenging. But suddenly, if they can tokenize their assets and borrow against themselves, or explore other ways through DeFi, there's going to be an unlock of massive liquidity that frankly is going to allow for more home ownership. And that's also going to, I think, buoy real estate prices and other asset prices across the world.
Yeah, I think that's right. And I think if that can happen in coinciding with the process going on blockchain and the ease of use there, I think it could change the entire industry. And I think hopefully that's where it's headed. And I think it's an interesting point too of decentralization, because I think you want, and like you were saying, I think it's protection in decentralization. And I think that's the kind of the trick, so to speak, because I think decentralization sounds good, but in real estate, you definitely want protection for your asset, for the title, like Ori's working on. So I think that in between, I think it's interesting to see how that is achieved moving forward.
Yeah, I always thought it was funny, the notion that you'd have a decentralized house and you'd say, like, who has the authority to evict or determine who rightfully owns and can possess this house? The state, is designed to be the only entity in the country that can, apply force against citizens, right? So in essence, even though the ownership may be recorded decentralized, even mortgaged in a decentralized manner, there is that touch point with the real world where we need a central actor who can be used in certain circumstances. So real estate's always been a fascinating one for me to think about, decentralized versus centralized, and what's important to do in both ways.
Looks like we have a question.
So true believers will predict that title and ownership will be on chain eventually. But in the meantime, what is the interim or a couple of interim solutions to tokenizing real world assets like a house? Like, what would that look like from a practical standpoint in the next 5 years or so?
I think, Val, you can probably speak to this, but I was just reading something where, and I don't know the complexities of it, but it was stating basically that to actually have a deed recorded, tokenized, to be an NFT or a new asset class needed to be created. I don't know, but I read that. So it seems like there may be a long road ahead for that to happen. So I don't know if there is, and I think fractionalized and stuff that Val's working on, I think that maybe is the interim, but complete ownership and transfer of title, tokenization of, I don't know if there is like a in between a yes and a no.
Yeah, I can briefly.
So I'd like to add to that.
Because, please go ahead, Ori.
Sorry. With any form of fractionalization, you fall under additional regulation, right? So when you talk about digitization outright of an asset, I think the most important thing is keeping to the original regulation of how, for example, the way we're working with it is we're creating title reports the exact same way they're currently being made. The only difference is I'm storing the data on blockchain and an insurance company is sending you the report using a PDF in an envelope. So I think the key for that and for the faster adoption of this technology is really just proving that you can operate under the same rules that traditional businesses are, but you're using a digital infrastructure. And over time, regulation regulation will change where there'll be fewer barriers of entry into that tech. But I think it's important that anyone developing any kind of business or product in this space uses the current regulation, doesn't try to change it or doesn't try to rattle too many cages, just proves the use case under the current rule set.
And I could just briefly add that the way people are tokenizing assets today tends to be under this current rule set where they either create an LLC, which purchases the asset, or a trust, a trust entity, which owns the asset. And then in both cases, basically the NFT, or rather the ownership of that entity is understood to be passed by the sale of that NFT. It just kind of comes down to how you write that legally. And of course, in both of those cases, it's the named, if I have the NFT, the company that, there's a house, it's an LLC, I have the NFT that says I own it, the company knows who owns that NFT. I sell it to you. In order for you to legally take ownership, you basically have to report to the company your name and KYC. Once the company knows who you are, suddenly it's your asset. So that's kind of how it's happening today.
I know we have a couple of questions. We have Elena, and then I'll come back to you.
Ori, I know you said you've been working on it for quite some time. Do you feel like with the new development of AI, did that kind of take create a more difficult road for you, and you had to reestablish and redo certain things to achieve the result that you're going towards? Or do you think that it helped? Or I mean, did it derail? What did this birth of AI and the help or not help of it do to something that you're trying to achieve?
It's a really good question. We actually stumbled into many case studies where we needed to use AI to help us. So it didn't really derail our business model very much. It actually just helped us accelerate the way we're able to provide our product. So, for example, in Florida, everyone's warranty deed, so everyone's documents of ownership to their house is actually saved as a PDF on a digital database that's owned by the government. And that's called the Digital Land Registry. So what we did is really we just scraped all of these warranty deeds using an AI model that we had to kind of teach. And we indexed all those variables and stored them into a smart contract. Once I have that in a smart contract, I can provide a title report, and then hopefully we'll be able to conduct digital title transfer using that information. So all it's done is help us, really.
Awesome. We have a couple more questions. I know Ori can't see the crowd, so just letting him know.
Tori, I want to ask you, have you actually digitized the title?
Yeah, so that's been done. We were able to produce titles in sub a second, and those do pretty much everything but can be underwritten on. So we're able to pull title, tax, lien, permits, code violations, even judgments against the homeowner, and we can run that on a daily basis. So on top of the fact that we can provide these title reports, we can monitor them and notify homeowners if there's been a change on a daily basis. And that creates an anti-fraud tool that we're also
let me follow up with
our users.
A different direction. Once you digitize the title, and you're using or doing that to produce title reports, correct?
Yeah.
What are you going to do, or what are you thinking about when the title transfers, and the token or whatever digital asset you're using tied to the title changes? Is the asset or that token going to be taxed?
So the token will be treated the exact same as it would be in the current financial infrastructure based on what municipality you live in. But the way we're treating it is your home title will be stored on a smart contract. As the homeowner, you are the holder of the wallet that stores that contract. So you're the only one who can approve and verify that transaction. And then we're creating, and we've patented, a proof of work protocol that allows title agents and brokers to sign in and verify components of that transaction. So when someone submits a bid on your property, you're going through a very similar process to what the traditional blockchain already uses with many tokens, where you're mining or you're providing a proof of work to verify that transaction. And all we're doing is automating a lot of the grunt work for title companies and pretty much creating a glorified DocuSign process for homeowners.
Yeah, and I think you touched on it, but you mentioned how quick it is for you to actually get all of this information versus it can take sometimes days, hours to bring together all of this data as well. So I just want to highlight that.
Yeah, well, look, my goal is to centralize all this data. So as a homeowner, like you want to know all this information, and you should know this information on your property and on yourself. If there are liens being put against your house, where are they coming from and how often are they coming in? You should be the first to find out. It shouldn't be at the point of closing. And two, it shouldn't take 2 to 3 weeks to transact a residential property. If you know the data's clean and you have the contract in your hands, why does it take so long, and why does it cost you so much? For the vast majority of cases in the US, people are spending about $1,000 to $5,000 on settlement fees when they're only putting 10 to 20K down for their mortgages. So why is the legal setup so expensive? And that's what we're trying to do, is reduce that transaction cost so you can really reduce the barriers of entry into real estate.
And going back to a previous comment I made, I think another roadblock or something that's eating up time is just getting loans, just getting the money, right? And so suddenly if you have alternative methods to get paid, I mean, you could do that instantaneously. And then with Ori's technology, I mean, you could close hypothetically same day or the day after. I mean, it would be really a big game changer.
Yeah. And I am sure if anybody in this room is a homeowner, that was not your buying experience that you closed same day. Maybe if anyone had the experience, awesome, but that is generally not the case. It is a little gruesome.
And I think in thinking about these processes and digitization, and I think Ori, when we had spoke previously, I had asked, does this replace the title agent? You think about all of these processes and all of the things they will replace. And I think that's the bigger question with AI now. It's like, oh, everybody's going to lose their jobs. And correct me if I'm wrong, Ori, but he was saying, no, we're just, title agents are going in and using these tools. And I think that that's exactly right. And, our jobs, it's something where I think all of this will speed transactions, save costs, but then you will still need those service entities along the way to advise on, sure, you can get a title report faster and quicker, but you need someone to interpret the information if you don't know how to read a title report. And so I think it's interesting to see how this will change the industry. I'm sure, some of the services will be lost. And then, like you're talking about with loans and origination, hopefully a lot of that, is lost, because I think it's so much for a home buyer going through that process. But I think it'll be interesting to see. I think it could elevate those service providers because it makes the labor part of it a lot easier, but then the knowledge and the human service can be highlighted in those. So I think it's another interesting question there.
I know we have a question.
Hi, guys. So I'm very interested in your model in terms of allowing people outside of the United States to possibly invest in residential American real estate. I think it's going to be hugely popular, by the way, because I know if you see what's happened with the American stocks like Tesla, Netflix, etc., it spawned, multi-million-dollar businesses off the back of people collateralizing these American assets. So I think that's definitely one that I'm very interested in. I guess for me, it's more around how you overcome the KYC challenges, right? Because I'll be interested for you to talk about that in terms of who are you allowing to have some, because I think ownership of stock is slightly different from ownership of property. Are you facing certain, are you thinking or considering certain barriers you may be facing, who you will or won't allow to own that coin? Or I'm just interested in how you're thinking about that.
Sure. So just briefly, we're following a sort of a well-trodden playbook in using Regulation S. If you guys are familiar with Ondo Finance, they're one of the big RWA firms. They have a product called USDY, and I'll tell you a little bit about what they're doing, and we're doing very similar. What they do is they issue a bearer bond, and bearer bonds used to be very, common, but in the 80s, the IRS put in some regulations that made it less attractive for U.S. Investors to hold those. Like if you're an American, it's actually quite disadvantaged, or there's no advantage to holding them, and also quite difficult for U.S. firms to issue these successfully. But with a bearer instrument, it can now trade permissionlessly. That's the point of a bearer instrument. And when these were paper, they traded permissionlessly. I think, gosh, was that Die Hard 1? Yes. that was the whole purpose of Die Hard 1 was someone was stealing a lot of, I think, Japanese or German bearer bonds out of some beautiful building in LA. That aside, if you can structure your projects appropriately to issue bearer bonds, which is what Ondo Finance has done, then all you're required to do is KYC that first sale, because from a KYC AML perspective, you need to be careful about who you're selling to on that first instance. Secondary trading becomes the responsibility of the holder, and certainly as a holder of a bearer bond, I would want to be very careful about who I was trading with, but the requirements on the issuer are not there. And that's how Ondo Finance and some of these other projects are able to issue successfully and legally bearer assets in token form that can then allow people around the world to access different U.S. financial assets, which, by the way, if you think about what USDC is, it is ultimately a bearer asset that is issued in this exact same formula. I hope that helps. And I'm happy to go in much more detail later. Yeah.
That's a great question. I want to open it up because just looking at time and stuff, 2 questions. I think it's, like I said, having this smaller crowd makes it more fun, hearing your questions versus questions we thought people might be interested in us answering. Did you have a question? Yes? Okay.
Has anyone seen an implementation of a NFT transfer where you're submitting the KYC information as part of the trade? So you could almost, before the trade gets accepted, the person who's buying the asset puts their information in. Obviously, you'd want to obscure it in some way. I don't know how it would be implemented, but such that you could do it in one trade and have the KYC information submitted back to the central authority, the contract owner of the original NFT contract.
So I can try to give my quick perspective on that. One thing we're finding is that when you put KYC into a contract to basically make permission trades, you have to have a transaction prior to that where you submit this address is valid and you're allowed to transact with it. And then if you go back, who's going to make that determination that they feel comfortable with the person's KYC? And that tends actually to be done by a service provider, a third-party service provider who's taking your information off your license. They're checking it against some databases. They're giving the confidence to the financial institution or other institution that we know who you are. Then the institution saying, "I agree. This is Kevin. We know who this is. Check." And then that gets your wallet address gets submitted to the contract, and then finally a transaction can be made. So I'm not yet, I have not yet seen someone do it all in one transaction.
Yeah, and to add to that, so I've seen a handful of decentralized transactions using NFTs, and those were not completely legitimate. And it's also why I don't believe total decentralization actually works. I think pretty much any financial asset, any regulated asset that wants to transact on chain is going to need some form of an intermediary to overlook and verify that transaction. That's why none of us sitting here today would be comfortable with me just sending you an NFT and saying, "This is the keys to my house, just send me $1 million in ETH." Like, no one's going to do that. If you want to transact ownership of an asset that holds weight and is important to you, you're going to want someone to sit in the middle and say, "This is kosher, go for it." So I think the future of Web3 is somewhat decentralized, somewhat centralized. We're going to have to create protocols and smart contracts that know how to integrate the rules that we're comfortable operating under, which is why legislation exists for these assets, but integrated into a smart contract. I don't think we're going to be able to move forward using blockchain or using AI or using any of this tech without having some form of trusted body sit in the middle and say, "This is good to go." Otherwise, I don't think tech will ever progress if we just try to disregard any form of regulation sitting in the middle.
We have another question.
It's actually a really funny story with real estate and crypto. About 8 years ago or something, I had a client that, well, it's a family, and they own crypto, and they were purchasing a nice $2 million home, and all their money was in crypto. And so there was no way for them to take out the money at that time except to actually cash it So that was the only part that sped up the transaction, so they didn't have to go through the loan, but everything else was exactly as it was for everybody else. For me, I just was advertising it as my first crypto deal, but it wasn't really a crypto deal, but it was a deal with crypto, but we tried to figure it out how to, use it some other ways, but we couldn't. So, I mean, I don't know as much as all of you guys do, but I'm just really happy that things are moving forward and people are coming up with some smart ways to make things more affordable and more efficient. So kudos to all of you.
That's actually, it's a great point. There are some companies that are focused on helping people purchase their homes with stablecoin, and then working with other companies to bring that stablecoin back to fiat. And transacting in this way, it does make things a lot faster than trying to work bank to bank. It just takes time. We are actually also hoping to have this type of conversation be a series. So I'm really excited to have every quarter or so more conversations and just keep bringing people that are working on different projects in this space. I want to also just, with the last few minutes that we have, are there any other questions that people have? Yeah, sure. We have a perspective, if Ori didn't hear that.
No, I couldn't hear that. Sorry.
I think Tori's on the right path. The titles will get digitized. Your data where it's stored will be important. The concept that a building lasts from purchase to sale, you need to kind of widen that perspective, because a building starts with construction and doesn't end until it demolition. So we start looking at these ideas, and from the real estate market, if you want everything accessible, you got to start looking at building information models. And not necessarily a database, but a flat file system that's cheap and accessible and controllable. You need to control the access. So
totally. So this is why I agree with you. I think blockchain's a fantastic tool for this, because it allows for keys that have specific access to specific data points. So let's say I'm a homeowner and I hire a title agent to verify my title, for example, something simple. For example, OCL's product is able to pull quick claim deeds, notice of commencement, obviously warranty deeds, liens, and so on, code violations and permits. All of those things are important, even if you're going to be building a development on a plot. So correct, this begins far before the transfer of title. This is even necessary if you want to understand the plot of land you're working on, or the plot of land that you're considering investing in. So not only does a tool like this or a database like this come into play when you own a house, you want to verify it and you want to sell it, this comes into play when you're driving down the street, you see a for sale sign and you want to verify that this property is worth what the seller's trying to get for it. And if you have any questions about that, you can pull that title up immediately and do your own due diligence.
thanks, sorry.
That's awesome. Any other last questions, maybe comments from the panelists? Oh, I'm missing, sorry.
Thanks for the talk, everybody. So I really like what Val said at the beginning, that like, is it better on chain, right? And I'm really curious, like what, like either homeowner or buyer, like what they feel the most beneficial. Is it like speed of process? Is it transparency? Is it like a more like accessibility from global market? Like what are the things that like they feel the biggest benefits to be on chain?
Sure, I think there's a few things in there. I think one is how frictionless it is, especially for a buyer. There's a lot of pain points in buying right now, especially when it comes to finance. And so if there are ways to circumvent some of those headaches, which can be accomplished by bringing it on chain and decentralized finance and other lending mechanisms, that could be a huge win. And that will be a huge win, and already is a huge win for buyers who are taking advantage of that. And then, it's speed of time. Time is money. Holding costs are real, especially when you start thinking about areas that are prone to natural hazards and things like that. you may not want to delay closing for a month or 2 or 3 or 4 because the risk goes up. And so if sellers know that they can close quicker, in other words, they could sell and transact faster, that could carry real weight in terms of economic value to them. So less risk, more reward, and potentially they'd be willing to sell a property for less money, which means a buyer could potentially get it for less. And so suddenly that the art of negotiation comes into play there. So instead of saying I'll pay $5 million for a house that'll close in 30 days, maybe they can pay 4.9 to close tomorrow. And the seller, depending on the seller profile, they might say sure, or they might just need access to that capital. And so I think those are some of the things that come into play. There are others. I don't know if you have any other thoughts on that.
And I think your question of, what are the pain points with buyers? We don't have the real world data because there isn't enough of it at play yet. And I think that's the issue is we see on our end, because we are in the business and we are doing this process over and over every day. We see the use cases and say this is fantastic, but actually us seeing it and it being used by our clients, that's where these guys come into play and are trying to implement those and being used at a wider scale. But we don't have the actual data right now as to, I think we can see what our buyers would benefit from, but them actually using it and putting it in process, we don't know yet because it's not being widely used.
Okay, we have, I think we'll take 1 or 2 more questions and then.
I was thinking for in order to purchase a house, a lot of people are like people are owning Bitcoin or cryptocurrencies, right? So if they own it, but some lenders doesn't see it as a real asset to, for example, you want to buy a house, like today you have some Bitcoin instead of cash or as a down payment or whatever, right? So what do you guys see the relation in order to buying, purchasing property related with the cryptocurrency in general?
It's interesting. You saw a couple of years ago before the downturn, you had some sellers that were offering to sell for Bitcoin. They were taking Bitcoin for the sale, but especially here in San Francisco, we just don't see much of it anymore. And I think that is great if that's happening, if a seller will take that, but that's rare. So I think that's what Yelena was saying, that now sometimes the only alternative is you have to trade, have to sell your Bitcoin in order to get cash to pay for it. But it goes to what Xander was talking about, if you could collateralize those. So I think that's part of this conversation.
Yeah, I have an anecdote and a company I remember reviewing. The anecdote is I was at a crypto event last Thursday, and I was hearing from the partner across the table that she was about to buy her first house, but was having trouble convincing her bank that her Coinbase holdings were an asset. And the problem was quite simply that Coinbase doesn't have a page which they don't give you an account statement. So there's nothing that says your home, your name, your address, and your balance. She couldn't find anything on their website that did that, which I just thought was difficult and unfortunate for her. But then maybe an example, back in 2021, I had seen a company, I think it was called Coin Home. I'm probably getting this wrong, but the gist of it was that if you had Bitcoin, they would help you do a loan against your Bitcoin in order to have the cash to buy a house. And the loan was at a super low rate. Maybe then it was 0% if you just collateralize with Bitcoin. Now I think I've seen things where it's like a 4% interest rate because they're collateralizing the house and the Bitcoin. They just assume that that's going to make them so safe that they're willing to take a risk at a 4% rate.
Yeah, and the rates you're typically getting right now are less than what you're getting from conventional banks. Of course, the risk is when you're collateralizing, you can be liquidated, which is what happened to me for a few years ago so I've been doing this for a few different properties I've purchased over time. Our team has worked with about a dozen people who have paid in part or full with crypto. I think the challenge is if you're doing it in part, some of the banks will actually say, where is this money from? And so that we're not quite there yet. And I think we're years away, not decades away from this being more integrated and socialized into our framework, our lending framework. But when you are paying entirely with crypto or taking stable coins, converting it to fiat, it is totally feasible, very quickly. And I have not seen issues with respect to that.
Awesome. Any other last question before we wrap up? All right. So I just want to give a huge thank you to our panelists, especially Ori. Doing this is not easy, especially where you don't see the audience, but I can tell you that everyone really was listening and really intrigued, I think, by what you had to say. Hopefully you'll be here in person for another one. Really want to thank the Space House of Web3. And also, before you leave, please eat the burritos and donuts. There's plenty there. We're going to basically open up the space for some light networking. And if you have any questions or you'd like to connect, please reach out to us. We'd be happy to.
Thank you all for coming today. We appreciate it.
Thank you.